Welcome to our explainer on the Modern Trader's Blueprint. Look, if you've been following the crypto space for even a minute, you know exactly how wild those charts can get, right? So today, we're cutting straight through all that noise. We're going back to first principles to break down the actual mechanics, the strategies, and really the mindset you need to consistently thrive out there.
Here is our blueprint for today. We'll start with what is crypto trading, then move on to finding your trading style, where to trade, speaking the crypto language, making your first trade, and finally wrap up with the golden rules of trading. Let's get into it.
Okay, Section 1. What is crypto trading? We're laying the foundation.
At its absolute core, crypto trading is literally just buying low, waiting for the price to go up, and selling high to capture a profit. I know it sounds laughably obvious, doesn't it? But trust me, when those charts are flashing bright red and the news cycle is spinning out of control, it is so incredibly easy to lose sight of this basic equation. Every single complex strategy we're going to cover today is really just an attempt to execute this one simple mechanic consistently. Now, the market essentially forces you to choose a personality. Are you an active trader or are you a passive investor? A trader operates on super short-term time frames, buying and selling constantly to grab quick profits. Naturally, this carries way higher risk. An investor, on the other hand, looks at long-term growth. They passively hold, and they just absorb all that day-to-day volatility for a much lower risk profile. Now, sure, you can do both with different wallets, but you absolutely have to know which hat you're wearing before you deploy a single dollar.
Moving on to Section 2, finding your trading style. This is about equipping your armory.
So your risk tolerance and your actual daily schedule have to dictate your strategy. Like, if you absolutely love adrenaline and you have hours to just sit and stare at charts, scalping in minutes or day trading might totally be your lane. But remember, the risk there is extreme. If you've got a demanding full-time job, swing trading over days or even weeks offers a really nice, manageable, medium-risk middle ground. And for the lowest stress, position trading over months or years is ideal. Or if you're highly technical, you might just let bot trading run 24/7. The key takeaway here, don't fight your lifestyle. Build your strategy around it.
Section 3. Where to trade crypto. Let's talk about choosing your marketplace.
Okay, so you need a battlefield. Centralized exchanges, or CXs like Binance, are fantastic for high speeds, massive liquidity, and just general ease of use. But there's a catch. You have to hand over your ID for KYC compliance, and ultimately the exchange controls your keys. On the flip side, we have decentralized exchanges, or DEXs, like Uniswap. These run entirely on smart contracts. There's no central authority, zero ID required, and you hold your own funds. The trade-off, though, if you mess up on a DEX, there's no customer service hotline you can call to save you. It's completely on you.
All right, Section 4. Speaking the crypto language. Time to decode the local dialect.
First up, we have HODL. This means hold on for dear life. Basically, whatever you do, don't sell. It literally started as a typo on an old crypto forum years ago, but it perfectly captures that iron will mindset of the long-term investor. When prices crash and everyone is panicking, the community just screams HODL.
Next up is the whale. This refers to someone or an entity holding a truly huge amount of cryptocurrency. We're talking so much volume that their individual trades can actually shift the entire market. As a regular trader, you're basically a pilot fish. You're constantly trying to track where these whales are swimming so you don't get crushed in their wake.
Then there's FOMO, the fear of missing out. You've probably felt this. It's that highly dangerous, gut-wrenching urge to buy a coin at its absolute peak just because everyone on your timeline is bragging about it. Seriously, FOMO is the arch-enemy of a disciplined trading strategy.
And on the complete flip side of that, we have FUD, which stands for fear, uncertainty, and doubt. This is the deliberate spread of negative news meant to cause a panic and trigger a sell-off. When wild rumors start swirling about government bans or massive hacks, that's FUD. It's designed to make you sell your assets at a loss. Recognizing FUD is absolutely crucial for staying calm when the rest of the market is losing its collective mind. Section 5. Making your first trade. Let's do a quick practice run.
Okay, let's look at the basic anatomy of a successful swing trade. Step 1. You deposit $100 onto an exchange. Step 2. You buy some Bitcoin when it's priced at $60,000. Step 3. You wait for the market to swing in your favor. Let's say Bitcoin rises to $70,000. Step 4. You sell, and boom, you've just made a $16.67 profit.
Now, I know what you're thinking. A $16 profit isn't exactly going to buy you a Lambo, right? But hold on. Focus on the math here. That is a 16.67% return. To put that into perspective, in traditional finance, investors pray for an 8% return over an entire year. The golden takeaway here is that you need to rewire your brain. Stop looking at absolute dollar amounts and start measuring your success strictly in percentages. Because honestly, that's exactly how the pros track their consistency and scale up.
Finally, Section 6, the Golden Rules of Trading. Consider this your survival guide.
All right, these are your absolutely non-negotiable rules for survival out there. Number 1, always learn first. Educate before you execute. 2, never risk more than you can lose. Seriously, don't play with the rent money. 3, always use a stop loss to protect your downside. 4, never trade on emotions. Strip the FOMO and FUD completely out of your psychology. 5, have a plan before you ever click buy. And 6, diversify. Don't put all your eggs in one basket. Guys, these rules are literally the only wall standing between a successful trader and a reckless gambler. So, we've given you the styles, the vocabulary, and the rules of survival. You have the blueprint. But in a market that never actually sleeps, theory only gets you so far. The charts are moving right now. So, looking at your portfolio today, what exactly is your trading plan?